Hello. Hi, everyone. Thank you for joining our analyst call. Tom, how are you?
I'm doing great, Ellie. Thanks a lot. Thanks for having me.
It's been quite some time. The last analyst we had Penny, our CEO and co-founder, where we discussed about the banking crisis and the impact on the crypto asset industry. Today is going to be slightly different, but I'm very excited to have you here because at the core of our research, educational purposes and efforts, what we do is really focusing on being data-driven. And the beauty with our industry is the transparency of the blockchain data. We can actually compile this dark forest of Ethereum and Bitcoin and other blockchains and make them more comprehensible for the audience into our own analytics. So today we're going to really focus on essentially the three new dashboards that makes a lot of sense in this current environment, especially the dashboard on Binance Proof of Reserves. We're going to show you guys essentially the wallet addresses, the inflows and the outflows of Binance so that you can see in real time the impact that we're seeing with the outflows of Binance right now. But most importantly, we also want to introduce you to our Bitcoin dashboards. And we have two of them. So if you haven't seen them, well, you're essentially having a VIP session with our very own data scientist, Tom, so that you can see in real time the benefit of blockchain transparency. So let's wait for another 30 seconds to get everyone comfortable. I think you're pretty comfortable, Tom. Are you? I'm pretty comfortable myself.
Yeah, me too.
Great.
It's awesome.
Great. So let's wait for 30 more seconds, and then we are going to get started. I'm going to share my screen, and we're going to walk you through essentially some of these key dashboards. I think actually we can start with Binance because many people, investors and people from the community may have a lot of questions with what happened with Binance yesterday. So maybe Tom, you can give us like a clear refresh of what happened with Binance. So Binance are apparently sued by the CFTC. So this is the regulator of commodities in the United States. What happened?
I can quickly highlight several key allegations from the CFTC.
Yep.
So essentially, one of them is Binance have their own market making arm or trading arm, and they are essentially trading against their own traders on their platforms. So that's one allegation. Yep. But ironically, that's the same allegation 𝕃, which is the founder of Binance, also use it to against SBF, which is the founder of FTX, to doing some shady operations on FTX. So now that CFTC is alleging Binance is also engaging similar activities. And then the second key allegation is Binance is still having close ties with the Chinese government. That point has been frequently refuted by 𝕃 over the past several years. He kept saying that he's Canadian, he's not Chinese, he's born in Canada, but then the Financial Times recently reported that they still have close ties with the Chinese government. So it's quite concerning on that front. And lastly, it would be the fact that they are having the U.S. users, and then it is clear that on the chat, like using signals, I think it's Signal, but then the key message is the compliance team saying that we can continue to allow the US users use VPN and just close our eyes regarding it. We can continue to allow the US users use our platform on that front.
Yeah, it's a big deal. As you mentioned, there are several allegations. Of course, these are not accusations yet, in the sense that this is a verdict by court, but they're getting sued. Binance is the world's largest spot crypto exchange, but also in the futures market as well. When you look at the structure of the spot and futures market, the futures market is the largest market structure in the crypto asset industry. Last year, there was about on average $1 trillion in settled volume on the futures market compared to $800 billion in total volume in the spot market for crypto assets. So definitely Binance is a juggernaut for these two market structures, but we're going to walk you through the implications of what happened yesterday for Binance. Right now, the impact that we are seeing right now with the on-chain data. What is fascinating is that every time that there is a news item or a new development or a ramification in the crypto asset industry, thanks to our transparent dashboards, you can see in real time the clear impact. Tom, I'm going to share my screen and then you can walk us through what we are seeing right now on the blockchain.
Yep.
Okay,
Sounds
so
good.
that was a long time ago. That was actually that was one of your first dashboards that we launched. We were able to collect the addresses of Binance on the Ethereum blockchain, so the world's largest network. And right now, what you're seeing here for the audience is two things. You're seeing essentially the total balance of Binance, right? So you can see here at the top of the assets under management on Ethereum for Binance, and the total at that time at the peak in 2021 in November was about $60 billion. Of course, it got slashed with the price action of assets, but more importantly, right now, there is basically half of that on the wallet addresses associated with Binance. And the other thing that you're seeing here is the breakdown of their assets, right? So the majority of their holdings, as you can see here, are mainly stablecoins. So Binance had a stablecoin very similar to Tether and USDC. And interestingly, that stablecoin got delisted because of persecution from a regulator in the United States, especially in New York City. So BUSD was competing against USDC and Tether. But interestingly, here you can see that still close to the majority of the assets are held by Binance. But what is more fascinating with this dashboard is that we can also see the inflows and the outflows that we're seeing from the Binance exchange, right? You can see here the largest holding is Ethereum, even though, of course, the majority of the holdings are stablecoins. The largest one in terms of dollars is the total balance is $32 billion. The largest value, so the largest assets is $6 billion, and that is Ethereum. You can also see the breakdown here for all of the assets from Binance. But most importantly, Tom, walk us through what we've seen yesterday with the outflows.
Right. Yesterday, we've seen the outflow of, it's not super crazy compared to historically, but then the outflow suddenly increased by quite a lot right after the CFTC has announced the news. So yesterday, we've seen that the outflow has around $1 billion. Compared to previously, historically, is not a huge amount, but then it is some significance. So in that particular hour, it is around 30 to 40 top outflow within 8 hours. So we've seen that users are trying to exit the Binance exchange due to the fact that they fear that Binance could enter into some trouble in the future. That's one explanation or one key findings here. And one thing I found it really fascinating is, for example, we've seen the current financial system, some of the banks encounter several different bank runs, right? Like SVBs, Silvergate, so on and so forth. But then you have no way to track the real-time outflow on that bank, right? But on Binance or on the crypto world, you can definitely do that. So I also want to highlight the beauty of blockchain technology and the transparency the industry players are providing every one of us in the market right now. And on the right, you can also see the breakdown of the outflow. We can see the major assets. In recent days, we've seen a large amount of the outflows of BUSD. We've seen that in December, we've seen that in February. And most importantly, it's because the reason that Ellie mentioned earlier is because they have been shut down by the regulators, so that we've seen that previously at its peak, Binance held around 30 billion worth of BUSD. But then the regulator said you have to delist and burn all your BUSD by the end of 2024. And that's why they've been sending out BUSD back to the issuer, Paxos, to burn all the BUSD and convert it back to the actual dollar. So that's what we have been seeing.
Yeah, and interestingly, Tom, sorry to interrupt you, we're seeing that actually so far today, because we're also measuring the outflows of right now, so it's on a minute-by-minute basis, you can see that the largest redemptions were actually Tether, about $150 million in redemptions so far today, right? That's the breakdown. The second largest, as you can see here, is Ethereum, and the third largest is BUSD, right? So $46 for Ethereum and about $24 million of redemptions for BUSD. And again, BUSD, the stablecoin, the US dollar stablecoin of Binance, cannot be created. There are no creations. There is only redemptions. So that's only one way to basically interact with that stablecoin. Interestingly, with the second largest redemption was not Ethereum, but actually that was USDC. USDC had about $60 million in redemptions. And the third largest is Ethereum, and the fourth largest is BUSD. As you can see here at the bottom, so the second to last is USDC, and that's about 60 million in redemptions. So many, again, many stable coins to free floating crypto assets. And of course, these are the assets held on the Ethereum blockchain. So usually on the Ethereum blockchain, people don't use a lot of wrapped assets. So for example, like wrapped Bitcoin, the main medium of exchange and unit of account is definitely Ether and the stablecoin. So that's why you don't see Bitcoin here, but we will be very happy also to look at the Bitcoin addresses of Binance to see also the impact on Bitcoin. But again, like Tom, when you're looking at the prices today, the market rallied, right?
Yeah.
Bitcoin is again above $28,000 as we speak, $28,400. Ethereum at $1,800. Is it priced in? Do you think this is a priced in event right now?
Like about Binance sued by the regulators, right? I think it could be priced in because we have encountered even bigger trouble, right? Previously, we have the FTX, and then comparatively, the Binance uncertainty doesn't seem to be that big of a deal. And that's something the community also have been highlighting previously. It's not a huge signal in the community, but then there are definitely some community members highlighting the risk of Binance previously might be engaging some sketchy activities in the past.
And here you can see the breakdown of all the redemptions on Binance. You can also see the creations, but over the past essentially 16 hours, there were many redemptions. The largest one that we've seen so far, as you can see, is BUSD for 19 million. And that was this morning at 11 a.m. Zurich time. So this is a great dashboard. After this call, by the way, for the audience, you're going to receive the links to these dashboards. This is a real-time dashboard that you can see whenever you need to. We have a specific page on Dune Analytics where you can see also all the dashboards that we have. Here you can see the breakdown of the top 10 token inflows today, and also the top 10 token outflows. So the top 10 redemptions for the tokens. So USDT, Ether, USDC, BUSD, etc. And then last but not least, we also like to see the daily mint. So the daily creation and the daily redemptions that you can really poke around with, as this is very user intuitive. I think the lawsuit from Binance is quite a big deal, especially for the allegations that we've seen in the filing. So we're going to really closely monitor the market to really understand the implications here. If you have any questions in the meantime, feel free to send them in the chat, and with as much transparency and data that we have and can collect, we can really provide you the most up-to-date information. And most importantly, what is very significant and innovative with this industry is the fact that we have access to real-time data, and the real-time data really helps to differentiate the signal to the noise. So we want to really increase the signal to the noise ratio, and that's really one of the mottos at 21 Shares Research.
Yeah, exactly.
So check out dune.com/21 Shares Research, Binance Proof of Reserves. Again, the concept of proof of reserves is really looking at both like the assets and the liabilities of a company, and not just the on-chain assets and the on-chain liabilities. When we're looking at basically this breakdown here, and Binance has about $32 billion in assets, these are not assets in the balance sheets, right? These are liabilities and essentially IOUs that they owe to the customers when they want to process redemptions, right? So in that case here, we're really looking at one side of the liabilities in the balance sheets, because the rest are debt obligations that we don't have access to because they're off-chain and not on-chain, right? So everything that you see here are on-chain information, but these are equally important as well, especially because they signal a lot of information that is equally important for the audience. And the other thing that I wanted to show you as well that is very related to FTX too, a very different topic, of course, but like why this is so important that we're looking at the on-chain data on a regular basis is because you can see here, for example, the transactions between FTX and Alameda. And these are very important methods to look into, because here you can see, for example, on the left-hand side, the transfers from Alameda and FTX since inception, right? So our on-chain data are able to give you in real time also what's going on for the distressed assets, right? So you can see here all the since inception. We've seen sometimes billions of dollars in transfers, very high, for example, here around 2021, actually at the peak of last bull markets. So really feel free to go around our dashboards. If you have any questions, reach out to us, reach out to me, Tom, and the rest of the team. We are really available and responsible, and most importantly, responsive for helping you navigate in this asset. The other thing that we are super excited about is our Bitcoin dashboard. As you guys know, Bitcoin has a significant performance since a year to date, but most importantly, Bitcoin has a programmatic supply, right? So Bitcoin has a limit of 21 million Bitcoins, and this supply is going to end in 2140. So what is very important here is really to understand when is the next time that Bitcoin supply is going to change, right? Because there is a clear monetary policy every 4 years, and it's called the halving. We're going to have a cut in half of the supply of Bitcoin. So here what we did at 21 shares is to give you in real time the estimated date when the next supply of Bitcoin is going to change. And that is about a year from now. So in March 2024, next year, actually in less than a year now, you're going to see the supply of Bitcoin happening every 10 minutes, basically being cut in half. And the other thing as well is that many investors are asking us, what is the performance of Bitcoin? What is the volatility level? Bitcoin is very volatile these days. How many addresses are interacting on the network? How many NFTs called ordinals are created? We have you. We got you here, and we have both financial metrics and also on-chain metrics. So on-chain metrics are more like the revenue of the miners and the user addresses, and also the transaction volume, and most importantly, the security measures of Bitcoin with the hash rate, right? So the computing power, how much do we have in the network? How secure is Bitcoin? This is all the on-chain metrics that you really need. And then on the left-hand side, these are more the traditional financial metrics that most of the traditional finance investors really care about, right? So you can see here, for example, the age of Bitcoin, 14 years old, the current price, the daily return in percentages, the year-to-date return, 71% year-to-date. This is really incredible. You can also see the supply of Bitcoin today. This is really close to 21 million. But again, as we mentioned previously, there is a supply that changes every 4 years with the halving. So that's why the rate of the supply of Bitcoin is going to decrease significantly going forward. What else is very interesting? The correlation with gold is very interesting as well, especially this year. Tom, we've seen a lot of inflows into gold products that we haven't seen since 1967, I believe. And there is a higher correlation into Bitcoin in light, of course, of the banking crisis. Some investors are moving away from the dollar hegemony, so the dollar dominance, and trying to allocate into a neutral currency or a neutral store of wealth. That is, of course, gold, used in many of years. But there is also the case for an emerging store of wealth that is digital native, where the supply is not controlled and tempered by a specific central bank or a specific government. And that is basically Bitcoin, where the supply is basically programmatic and there is a specific protocol rules where it cannot be changed easily. So definitely the correlation of gold with Bitcoin is very interesting to look into. You can also see the 200-day moving average. And most importantly, we want to make that experience more intuitive, so you can see in real time as well the current price of Bitcoin compared to 200-day moving averages, the 100-day moving average, and 50-day moving average. You can also see the yearly performances of Bitcoin. So actually 2022 was the second worst year for Bitcoin, I believe.
Yep, exactly.
Yeah, and that was after 2018. So 2018 was a very tough year. And it's funny because 2022 was one of the worst years for stock investors and bond investors in more than 200 years. So that means that our grandparents and great-grandparents never experienced that market environment where people had to actually allocate into cash or link bonds. So basically inflation protection bonds in order to basically have and find alpha. So for a specific year where once in 200 years, there is some really bad performances, Bitcoin actually has weathered pretty well compared to 2018, where in 2018, we had a bull market for the tech sector. But of course, in late 2018, the Federal Reserve increased the interest rates and stopped the quantitative easing. But I think it's going to be interesting to see how 2023 is going to pan out. So far, this is a really good year for Bitcoin. And you can see here as well, over time, the heightened correlation with gold too. The cool thing that Tom created actually here is that you can also see investment simulator where you can pick a specific date and then see over time the return of Bitcoin for that specific time period. So here you're seeing the year to date, but you can pick a specific date in the year, previously, even at the hour, to basically measure the performance of Bitcoin, Ether, and also gold. So very cool, Tom. Well done. Tom, what else? What do you see with the volatility?
So if we just click on the 200-day volatility and remove the 30-day volatility, we've seen that the long-term volatility is actually decreasing over time. So previously, a lot of the news are depicting Bitcoin as a really volatile asset. But over the past few years, we've seen that Bitcoin as an asset has matured a lot. Not only has it gained more adoption, not only institutionals, retail usage, but also a lot of companies and even governments are using Bitcoin right now. And therefore, with that type of wide adoption, it has helped that Bitcoin to gain more popularity. The market cap has increased quite a lot, and the usage and the utility of Bitcoin also increased. And therefore, it is expected that the long-term volatility is actually decreasing over time, especially the 200-day volatility here.
Yeah. What about the second one here on the right-hand side? We're seeing the shoe chart for Bitcoin. This is the implied volatility. Tell us more about this and why this is important for investors.
This is a chart introduced by Carlos, our very own researcher, good friend of ours. And then he really likes this chart, and therefore I include it here. And I also found it really useful as well. So this chart is actually measuring the abnormal daily return. So the upper limit is calculated via 3 standard deviation, +3 and -3. And therefore, when there is some abnormal activities compared to the usual one, you can see that the yellow line, which is the daily return, will hit the upper limit. And coincidentally, you can see the daily return hit the negative upper limit whenever there are some huge events happening in crypto, such as the collapse of FTX.
Yeah, exactly.
And then the implosion of Three Arrows Capital, which is one of the largest hedge fund in the crypto space. And also previously the COVID crash, but due to the fact that the time frame limit, we haven't shown it here. But that's how we can use this chart to monitor standard deviation to detect extreme market conditions.
Yeah, so essentially we're trying to monitor the black swans, the outliers in a standard distribution, right? So essentially it looks like a bell curve where you have the normal rate of returns for an asset, whether it's like fixed income or equities, but in that case it's going to be Bitcoin. And we're looking at how the returns are panning out in basically the outlier limits. So definitely here you can see back in November that there was some heightened volatility, downside volatility for Bitcoin that coincided with the collapse of FTX. So really check it out. If you have any questions, let us know. But again, to repeat, this is a chart that aims to monitor BTC daily returns and use standard deviations to detect extreme market conditions. I really love this one, Tom. And Carlos did an amazing job here, but Tom did another one here with the annualized rate of inflation. So tell us more about this. How do you measure it?
So we annualize the inflation rate by calculating the change in the circulating supply. So it matches exactly with the halving schedule. So you can see the halving schedule is around 4 years. That happens one time. And that's the time the annual inflation rate will drop quite a bit. And right now we're expecting the next inflation rate to drop during March 2024. So right now the current annualized inflation rate is around 1.something%. And previously, when the inception of Bitcoin, it's just really high because during that time, the block reward for every Bitcoin miners per block is 50 Bitcoin. So that time it released quite a huge amount of Bitcoin every block to incentivize miner to continue to mine Bitcoin. But right now, since the network has grown a lot and the price of Bitcoin also grown a lot as well, and therefore the calculation has decided it's encoded in the program that it will do the halving in every 4 years.
Yep, absolutely. And then the other one on the right-hand side is the P/E ratio for crypto assets. And the way we calculate that is looking at the transaction volume and most importantly, the market cap, right? So essentially the transaction volume is a indication of the revenue for the miners. So the higher the transaction volume, the more miners can collect transaction fees, right? Because every time there is a transaction on the Bitcoin network, the miners collect a fee for that, and that's part of their revenue, in addition to the newly emitted Bitcoins that happens every 10 minutes, right? So today there is about 6.25 Bitcoins out there. The other bulk of the revenue for the miners is basically the transaction fees, right? So what is important here is understanding how historically Bitcoin is moving along in terms of valuation compared to the previous years, especially the previous bear markets, right? So now, of course, there is a higher ratio because of the fact that the price of Bitcoin has increased, because the numerator is a market cap and the denominator is essentially the transaction volume on the network. And to give you a number, the revenue of the miners today, when you just take into consideration the block reward, so the number of Bitcoins that they receive whenever they are eligible to settle transactions on the network, it's about $180,000 that they receive every 10 minutes in dollar terms. And then secondly, you can also see the number of monthly active addresses, on the Bitcoin network. There is, of course, an uptick that we've seen lately, thanks to the rise of ordinals and other innovations that we're seeing on the Bitcoin network and smart contracts. What is fascinating here is that you can also see the schedule of the supply of Bitcoin and when it decreases. So exactly when we have the halving. And of course, over time, like this yellow line is actually becoming thin and thin because essentially the supply of Bitcoin is decreasing more and more up to 2140. And then most importantly, what is very fascinating, especially over the past few days, is really the highlight, I think, of the week is really the security of Bitcoin. So Tom, maybe you can walk us through what we're seeing here and what is the hash rate?
So the hash rate is essentially measuring the amount of computation power being used for mining, right? For Bitcoin, this network, the targeted settlement time is around 10 minutes. In the coding itself, it has a variable called difficulty. So it will be adjusted whenever the settlement time is above or below the 10 minutes range. So if it is above, the network will become easier to mine. And if it is below 10 minutes, it will become harder to mine for the miners so that it will be more consistent for block production in a manner. But we've seen that over time, especially in recent days, we've seen that hash rate has gone up tremendously. It is at all-time high range. One of the potential reason or explanations is because ordinals has allowed miners to gain more fees, and therefore more miners are incentivized to compete to gain more transaction fees nowadays, and therefore causing the network to increase in hash rate over time.
Yeah, absolutely. So definitely here, the TLDR is the security of Bitcoin is becoming stronger and stronger over time. And that's a very important metric from a valuation standpoint. And then I would say the over innovations that we're seeing right now with Bitcoin or ordinals or NFTs. So you can see here also over time, the number of new emitted NFTs on the Bitcoin network. Most importantly, you can also see the top 100 wallets that actually hold Bitcoin. And the TLDR is no, Bitcoin is not highly concentrated for the top 100 wallets. As you can see here, actually the largest holder of Bitcoin has about 7 billion in their wallet. And most importantly, that's basically less than 2% of the total supply of Bitcoin. So interestingly, when we did that exercise and looking at the top 100 wallets, well, actually we found out that from public filings, so we didn't come up with that randomly. So from the public filings, we discovered that like among these top 100 wallets, there is 1% of Bitcoin holdings that are held by the U.S. government. And it's a good segue to our discussion here, where you can see that essentially the U.S. government has about $5.7 billion in Bitcoin wallets. And what is fascinating is that this is a lower bound estimation. Some of these Bitcoins were actually seized during the past. We can see here the dark web marketplace Silk Road, the Bitfinex hack, and most importantly, another seizure as well from Silk Road 2. So check it out. You can see also more information here with the latest transactions of these wallets. It's very important as well for the value investors to look into the potential selling pressure and the movements of these large holders. Even though, of course, like the U.S. government has actually less than 2% of the total supply of Bitcoin, so it may not have a huge impact on the price action. But again, I think these are very valuable things that the audience here and investors worldwide really care about. So really good job here for Carlos for pulling this off. Actually, that was his first dashboard. So really congrats, Carlos. And yeah, this is it for the analyst call. We're almost at time. Do we have any questions from the audience? I'm going to stop sharing my screen and see if we have any questions from the audience. It doesn't seem like it. Tom, on your side, do you have any questions, comments, or concerns before we wrap up the call?
I don't think so at the moment. Maybe we explained too well because the data explains itself, right? We don't need much explanation. It's clear and they can explore themselves. It's free tool. Don't worry about paying anything. If you say that it asks you to pay, you need to be aware of that. It might be a scammy page. You don't need to pay for anything.
Yeah, absolutely. Thank you, Tom. Thank you so much for making the time for the audience here. Guys, we hope you enjoy the session. It's always a pleasure to have you on a bi-weekly basis. Stay tuned for the next one. There is a lot to unpack in this market, but I want to thank you so much, Tom, and thank you everyone for making the time. And after this call, you're going to receive, of course, the presentation, the slides, and most importantly, the link to our dashboards. Thank you, everyone. Enjoy your day.
Thank you. Thank you for having me.
All day.
Thank you. Bye-bye.